वेलकम टू माय चैनल अकाउंट्स फिनांस एंड एक्सेल। आज हम डिस्कस करेंगे रूल नंबर 2 फॉर डेबिट एंड क्रेडिट कि हम कैसे यूज करते हैं। हाउ डू यू यूज ऑन द बेसिस ऑफ गोल्डन रूल्स। सो टू नो गोल्डन रूल्स, हमें ये डेबिट और क्रेडिट जानना था, जो मैंने जानना है, जो मैंने प्रीवियस वीडियो जो है मेरा इससे पहले वाले, जिसमें मैंने डेबिट और क्रेडिट का रूल जो है कैसे यूज करें, इसका फर्स्ट पार्ट है, उसमें आप देख सकते हैं। नेक्स्ट जो है रूल को मैंने ये भी बताया था कि इट हैज टू पार्ट्स। वन इज नोन एज अकाउंटिंग इक्वेशन एंड सेकंड इज अकाउंटिंग रूल। सो यहाँ पे here I am going to discuss about accounting rule, that is also known as golden rules. So accounts has divided into two parts, and first part is called personal accounts and second part is impersonal account. Impersonal account has two parts. First part is a real account, and real account also has two parts, that is known as tangible real account, that means tangible assets account, also known as tangible assets account, and second one is intangible real account, that means intangible assets accounts. Now the second part of impersonal accounts, first part was real accounts and second part now is nominal account. So here is the complete structure of the accounts you have to understand. अब यहाँ पे हम बात करते हैं what is personal accounts. So personal accounts is an account which related to any entity, whether individual है और firm है या फिर association है, like ABC Limited or SBI State Bank of India or TCS societies और कोई individual Mr. Jojo or Mr. Johnson. These are our personal account, but one more aspect is here. Any accounts that represent personal account, like employees are working in company, so company has to pay a salary to them, so they are individual and also they are recorded under liability. So here salary payable is a liability. So payable is also known as personal accounts because it refer the personal representative accounts for the employee. Now let's know impersonal account. So first we should understand real account. इसका first दो पार्ट में बटा हुआ है, two parts are there. Tangible assets account. What is tangible assets account? The tangible assets account refers any assets that is touchable. We can touch it, like machinery, furniture, stationery, anything that we can touch. And second one is intangible real account. That means any assets that we can touch, like patent, trademark, copyright, goodwill, etc., etc. So real account refers to the assets and liability side. So always remember. Now come to nominal account. Nominal account related to any expenses or losses or profit and gains, like rent, salary, wages, or etc. So here, if you want to bifurcate the accounts, like personal account, then real account means assets and liability, nominal account means expenses and incomes. So these three sections are there. Here, first account is personal account. As we know, real account and nominal account. There is only two type account, and here real and nominal account was a part of a personal account. So three account we will discuss here. Now personal account means, as I have already discussed, personal or entity. Real account means assets or liability, and nominal account means profit gain and expenses and losses. Now first golden rule for personal account says Debit the receiver, credit the giver. Personal account, any person or entity who receive the cash or anything, just debit them. Or if any person or people gives something or entity gives something, just credit them. So this is the first formula for personal account. Now real account have different formula. That is debit what comes in the business and credit what goes out of business. That means any asset or property, if it comes to business, just debit them. Or any assets if get sold out from the business or put it off from the business, just credit them. So that is the formula is asking about the real account if you have assets and liability. Now come to the nominal account. So nominal account is talking about debit what you receive, any service or something you receive, just debit them. Or any service what is goes out, or product what goes, whatever goes out, just credit them. So here these are the three formula. I am going to describe it on the practical basis. Let's come here. For example, I have taken the same example what I had described in last video. For example, here Mr. Rohit started a business with rupees 1 lakh. That means Mr. Rohit, who is individual and he is investing cash in business suppose ABC Limited. Here Mr. Rohit has invested 1 lakh rupee. So as an entity assumes or consider Rohit as a liability and cash as an assets. So as per rule, cash is an assets. So assets, cash is being received by entity. Then it is real account and debit what comes in the business. So cash will be debited in the business. Now capital account, because Rohit has invested, so Rohit is a capital, recorded as a capital. So Rohit is a personal account, and what personal account says? Credit the giver. So Rohit has given, so Rohit is a giver. Then credit the capital account, 1 lakh. Now come to the second point. Goods purchased from ALT Limited for rupees 30,000 on credit only. So here goods purchased, here you should not consider goods because goods is considered as a stock and stock is an asset. So here you don't consider it as an assets. You have to consider purchase in expense to acquire goods to earn revenue through operations. So this is an expense. So purchase is an expense. And so here ALT Limited is a creditor because we are purchasing and paying cash. We have to pay to cash to ALT Limited accounting. So ALT Limited accounting is a company as a liability from whom we have made a purchase. Mr. Rohit has made a purchase. So purchase is an expense to bring stocks. So purchase has expense, and what expense means nominal account is talking, it is talking that debit what comes in. So we are purchasing, acquiring something, so purchase is debit. Now about the personal account, that means Mr. ALT Limited is a giver, so giver means credit. Who will be credited? Credit the giver. So here personal account has been credited, that's ALT Limited. Now sales of goods on credit. Goods has been sold on credit. That means ABC Limited 35,000 has been sold goods. Now, so sales of goods on credit. Mr. Rohit's company has sold his goods to, that means product to ADB Limited for 35,000. Here, sales is a kind of income or revenue or service. So this is a service or income we can consider because we have generate the revenue through this. What is called as nominal account? Debit what comes in, credit what goes out. So this is a sales, that's a product we have delivered. So it is a nominal account and credited is because goods has been delivered. So who is receiver? Receiver is ADB Limited. It's a personal account. So debit is receiver. So ADB Limited has been debited. Now this is the journal entry have to put into the profit and loss account and balance sheet. So put it like that. Cash account, that is assets. So this is debit, so put it to debit side. Debit side is this side. This is just uh, for your information that this is the debit side of balance sheet and credit side of balance sheet. But you can't write here because this is not acceptable. This is here because only for your explanation. Now come to the second point, capital account. Capital account uh, appear in balance sheet, capital and liability side. So here 1 lakh rupees has been credited. Now goods purchased from ALT Limited 4 rupees 30,000 on credit. Purchase account debit. So here in balance sheet, because this is a normal account, expense 30,000 has been debited. ALT Limited accounting, that is the creator. So ALT Limited is creator here, 30,000. Now sell of goods credit. ADB Limited. ADB Limited has been debited, so ADB Limited will be as a debtors on asset side because this is non-current asset. This is current assets. Now come here, 35,000. Okay. Now sales. Sales. This is revenue, so it is on credit side. Now see, you can see that 35,000 revenue is here and expense is 30,000. Your margin, that means profit, is 5,000. And so 5,000 will be added with capital because this is a part of capital. So when your revenue increase, your capital increase. That is the logic. So these are the explanation from my side. If you have any question, any query, just put your remarks into the comment box, or you can also mail me. Just go to the link of this video. So thank you for the session and thank you for your support. Bye.